Hello everyone and welcome back to Southern Wealth. I hope you guys are doing very well. If you're wondering why haven't I been recording, it's because my cough is still not away, still not going away, and actually I didn't like my last video because I was really coughing really badly. So I'm hoping that my throat can keep it up for the next 20 minutes or 15 minutes or so. But if I do start coughing, I apologize in advance. If you do enjoy the content, please consider dropping that like and subscribe. As you guys know, it's the only thing that I ask. I'm planning on doing another live stream, but I will do it closer to so basically when I'm feeling a bit better and confident that I'll be able to speak for like an hour without coughing 550 times. So I'll keep you posted on that one. So I wanted to split the video in three. Number one, macro. Number two, something that has happened with the famous YouTube finance guy. And the third one will be a bit more focused on crypto and where we stand today. So on the macro front, inflation came stronger than expected. I think it's still reminiscent from the Biden era in the US, obviously, that's what I'm talking about. I think the markets have recovered. So they initially went down quite aggressively, but they've recovered most of the down move. I think the Nasdaq ended up in the green. I think same thing for the S&P, and I think Dow Jones and Russell a little bit red. Of course, bonds sell off because they price less rate cuts, and Russell, as we've discussed here 1,000 times before, Russell is the one that's get impacted the most. Still, bonds didn't sell off as they used to, and if you see what Trump has said, he said we need lower rates to go in pace with the tariffs. Now, why is that? I think that was a very interesting remark, and that shows to me that he actually understands his leverage against particularly China. So he has leverage versus countries, smaller countries, in which they export, 75% of their stuff to the US. But if you actually look at the basket of imports, they constitute less than 10% of the imports. So they're easily replaceable, and it's a leverage that Trump can pull very effectively because of the dependency that those countries have on the US. I'm thinking about Canada and Mexico. There's a reason why they cave in so fast, within 24 hours, and Colombia, same thing. Colombia is even worse, within 20 minutes. They were basically caving, and the reason is for the US is not a big deal, and for those countries it's basically by far their biggest trading partner. So on those ones it works very effectively. Worked on Mexico, worked in Canada, worked in Colombia. China is a little bit different because the US is so dependent on China, on Chinese goods, that the tariffs actually start to hurt. But the idea is not so much to tariff them to set up a tariff on them for the sake of setting up a tariff on them. The tariffs with China are a way to start the negotiation. This is the point that I wanted to make. That's why Trump was talking about needing interest rates to come down. The trade that Trump is going to make with China, and it's going to be very beneficial for the US because China is desperate. China economy is slowing down very aggressively, and their bond market is pretty much down the tubes. I mean, you're talking, I think that their yields were down to 1%. So they are having a massive deflationary spiral. Now people think, oh, but that's great, right? Because deflation means lower cost, blah, blah, blah. Yes, unless you have a lot of debt. Think about it. That means the money in the future is worth more than the money today. So in that scenario, to be a creditor is great. To be the person owing the debt is terrible. So China has announced, if you guys recall, the biggest stimulus program of all time that they've ever had. $1.4 trillion in fiscal, plus, I don't know, I think it was 3 trillion monetary. But they can't do it. They desperately need to start it, but they can't because the dollar is far too strong. If they do it, the yen is from Japan, the yuan will lose the peg to the dollar, And basically that international market liquidity, poof, disappears because nobody trusts their currency. Their currency only has value because it's pegged, linked. You can swap it for the dollar. As soon as that connection disappears, the yuan goes the way of the dodo. Poof. Just see what happens to currencies that were previously pegged to the dollar and all of a sudden lose that peg. Just check what happened in history every single time. You see, people forget that the yuan is only 3% of global trade. It's a very useless currency. Most people don't need it for anything, particularly outside of China. So that's basically, so what is the trade that Trump is trying to make? Or Trump people, I don't know if somebody explained this to him. It's not necessarily, people are losing a lot of time focusing, oh, it's going to be steel and aluminium and what. No, that's not what he's what he's trading is the following. Hey, China, we'll give you a lower dollar, but you need to do A, B, C, and D for me. How do they give them a lower dollar? By having the Fed cutting rates. So that's the plan. You have the Fed cutting rates over here, lowers the dollar, and Trump already said it, we need a softer dollar. And China now can print, just like in 2017, its way out of the problem. And I believe that's what's going to happen. That's what they're going to do. And that's why he's giving the signal to Powell. Hey, Powell, I need you to play ball here because I need you to start cutting the rates so the dollar loses its value versus the yuan, so then they can print over there. That's the plan. People say, oh, but that's going to create inflation. That's going to create inflation. We've talked so many times about this year. No. Money printing and lower interest rates does not create inflation as long as you have the banks as intermediaries, because for 80% of the population, that money is not available because they're already over-indebted as it is today. So it doesn't matter if the interest rate is zero. They go to a bank, hey, give me 50K. Say, oh, you're joking, no? You have like 3 mortgages, 2 student loans, 2 car loans, forget about it, you're not going to get anything. So that's the plan. But it's good to see that markets recovered so fast from something that in the past it would throw them out 3 or 4%. I think what's also very helpful is that the ISM has finally bottomed and we are above 50, which means economy is in expansion mode. So above 50, expansion, below 50, contraction. We've been in contraction for about almost 2.5 years, which explains why Trump was elected. Doesn't matter what the reports say, what the job reports come out. Nobody pays attention to the ISM. So it's a much more trustworthy piece of information. And that will tailor also into crypto later, but let's keep it aside for the moment. Then I need to talk about something. One of the reasons I created this channel was to warn you about the dangers of YouTube finance people and the things that they sell you. And then basically, if you start buying stuff from them, it's a good way to get yourself completely annihilated. One of the people I've discussed was Meet Kevin, who's the most famous one. Meet Kevin just announced that he's going to delist his ETF after massive underperformance of the market. So basically, the S&P and the Nasdaq have gone up 20% plus, and this ETF went down 3%. You see, Meet Kevin made the biggest mistake as a YouTube grifter that you can make. He created a product that is transparent. No, don't do that. The way that these people thrive is on selling courses, selling you trades that they've done with their private group, and to show you public accounts while hiding the private accounts, just like Jeremy Financial Education does. He has his public accounts and then he has his private accounts. And sometimes he slips some information. Something like, I was down $1 million in Tattooed Chef, but then Tattooed Chef fell another 50%, and he said he was only down 800K. Weird, right? How does that math work? It doesn't. So Meet Kevin created a transparent product. And as it happens with all the YouTube grifters, the ETF performed so poorly that it is now delisting. The most amazing thing, and I encourage all of you to watch his video talking about it, I think his ETF is called PP, is that he manages to make a video like that, and half of the video is shilling you courses and other projects that he has. It's amazing to me. Like, sorry, the lack of awareness to go out after you're delisting your investment product after a massive bull run. I mean, a year of 20% plus. You don't have that many in the stock market. It's like basically everything goes up. And he managed to pick the ones going down. I think he was like shorting Bitcoin at some point. And of course, charging you a much higher expense ratio than a normal ETF. And now he's selling you courses to teach you how to make money in the same video. Half of the video is shilling his courses. This is your perfect example. He made the ultimate YouTube grifter mistake. He created a transparent product. No, that's not how YouTube finance work. The way YouTube finance work is you talk about 100 things, and then one of them happens. And then you forget the other 99 and you only talk about that one. Now with that one, you try to start selling stuff to people. And then, a corrective year comes, you go down, you come you make a video, and you cry in front of the camera saying, I made mistakes, blah, blah, blah. And then people say in the comment section, oh my God, you're so transparent. Let me give you even more money. And here's a bunch of more subscribers. So he said, instead of looking at ETF, I could have spent more time doing the courses and videos. Yes, that's how YouTube finance people actually make money, is by selling that garbage to people. So, yes, or taking FTX sponsorship money, right? Remember that? It was the same one that took it. Or BlockFi sponsorship money, right? That's how they make their money. Their massive ROI, return on investment, comes from getting money from people like you. See, that's why here we don't sell anything. There's nothing to sell. So, but I've been warning about these people since I created the channel. And I said, I don't care what these people tell you. They all underperform the market. As soon as the biggest one comes up with an ETF, that ETF doesn't last 2 years under consecutive 20% plus years on the S&P 500 and consecutive 100% plus years on Bitcoin. And he's supposed to be a crypto guy as well most of the time. So yeah, this just shows you, for the privilege, it charges you more money. And is already back to shilling stuff to you again on how to make money in trading stuff that he created and managed to lose money on. So let this be a cautionary tale of who these people really are. Now I want to make a warning for my friends Goldbugs and Peter Schiff in particular. Peter Schiff is completely crazy. Is going completely wild with the gold recent performance above 2,900. But here is the problem. Harry Dent, the person who's been predicting $700 to $1,000 gold non-stop, has just came to his YouTube channel and announced that he has a company that sells gold and silver. The more anti-gold guy that I've ever met. And I was watching Piers Morgan, and Piers Morgan's sponsorship, he was talking, if you want something stable and good, buy gold with, Piers Morgan, whatever. Now, this is very dangerous, particularly because Trump is advancing his discussions with Ukraine and Russia, and I get the feeling that if we have a peace agreement there, I see the gold price dropping some like 5% in a couple of days. So, but my point being, people who are completely unrelated to gold, are pushing it, like Piers Morgan, and people who have been for years anti-gold are pushing it like Harry Dent. So be careful. That's all I'm saying. Now, when it comes to the crypto market, one thing that I like to see was we were selling off after the inflation news, and boom, we reversed the move and start going up. Now, I've said this before, there's a good indicator, which is, for example, 2021, the reason why the bull market peaked earlier, most of the bull market in April 2021 with Bitcoin, was because ISM peaked in March of 2021. This has been true also for 2017. This has been true for 2013 as well. When the ISM peaks, that's it. We just bottomed it. So I think we have a long way to go. There's this notion that the cycle can extend to the first quarter of next year, potentially, because ISM is so low at this stage of the cycle. We'll see. Depends on how fast it rises. I don't think so. I think somebody asked me this question. Hey, what happens if you're wrong about October and the cycle goes further? I will say it again. I will never be completely out of crypto. I will always hold 15 to 20% in crypto. So if that's the case, 15 to 20% minimum. Of course, it depends. It depends on how the market is evolving. And if the market is evolving in a certain direction, that I see that there's an increased likelihood of extension. Not because people are saying it, but because certain indicators are showing it, then sure, I'm willing to hold a little bit longer. I was planning to hold into quarter 4 anyways, but even if I sell a lot of my crypto in quarter 4, I will always have something. So let's say I have 25% left. If the crypto market does another 10x, sure, I just got another 250%. See what I mean? So my plan is never to completely get out, because indeed that can happen, that the cycle can get extended. The same way that it was shortened the last time, it can get extended this time. Perfectly possible. So when I set my strategy for this year in the cycle, this is my strategy based on the game conditions. It's a bit like saying, now, am I changing my prediction? No, I'm not changing anything. What I'm saying is, do I have other strategies or adjustments if things change for some reason? Sure. It's like, imagine imagine you have a football team, NFL team, NBA team, whatever. And you have a game plan for the game, right? Okay, so we're going to face these guys. I have this game plan, blah, blah, blah. Oh, my star player just got injured. Or I'm playing this strategy, but I'm losing 3-0 by halftime. Should I keep it? Or should I change it? See what I mean? You go into the game with a certain mindset and a certain plan and a certain expectation. Obviously, if things materially change, then you need to adjust your way of playing, just like in any case. Now, for example, let's say that we don't pump until April. Am I going to sell all my crypto? No. Are altcoins still cheap? Yes, very much. See my point? I'm happy to wait. If I have to wait until March 2026, I'll wait. It's not a big deal. What I'm trying to say is that people get too focused on, this is my strategy, this is my expectation, this is what I'm going to do. Now, this is based on certain things happening. If certain things don't happen, it's your responsibility to adjust your strategy. So my idea is governments need to inflate the currency, risk assets will benefit, liquidity will explode this year, risk assets benefit, crypto benefits the most. First, Bitcoin, then Ethereum, XRP, and the likes, and then we go down the risk curve. Now, let's say there's a complete change of the monetary system, central banks are abolished, no more currency debasement, finito. Of course, my worldview adjusted, but that's not the case. We are nowhere near any of it. I think the bull market is very well in its way. Bull markets end in depression, Bull markets end in euphoria, not in fear. The amount of people saying that there's not going to be an altcoin season, and the amount of people saying that the cycle's already over, it's so funny to me that I'm going to laugh so hard in a few months when the whole thing flips on the head. The amount of shorts with leverage on Ethereum at the moment is so big. I'm really curious to see what's going to happen when that little game starts to unfold. What I'm trying to say here is this: very simple. I have a strategy. You guys know what it is. I've disclosed it a year ago. This is what I'm planning on doing. If things remain as I expect them to remain, if there are material changes, I will adjust. If my star player gets injured, I will adjust. If my strategy is not working with a specific team, I will adjust. That's it. Pure and simple. In any case, I like to see that the news came out, the sell-off happened, and basically within an hour, it was all sorted out, and we actually ended the day quite strongly. This is the type of things that you want to start seeing as we progress through the cycle. So far, it looks very similar to a 2017 cycle. The narratives are all the same. So I have high expectations for the cycle. Am I about to give up? Am I about to throw my towel and start crying? Hell no. But I will remember all of those who have given up. I mean, the Ren Nuna video of, he's basically now saying, get out of altcoins, finished, etc. We'll see in 3 or 4 months how he feels. So we're gonna have some fun. I still have very high expectations. None of this has changed. And for the person that has asked me, no, I will never sell all my crypto regardless of the time frame. So yes, if the cycle extends, I will still do very, very well. If it doesn't, I will still do very, very well. That's the point. If this happens, I will do very, very well. If that happens, I will do very, very well. Oh, but you could have done more if you had all of it here and you had sold the perfect top. Sure, but I'm not trying to catch tops and bottoms. That game is for noobs and amateurs, and that's the game that people get destroyed. And with that, thank you very much for your support, guys. I really apologize for the coffee. I'll catch you in the next one, and I hope that in a couple of days, it's all full healed up. Thanks a lot, guys. Like and subscribe, and I'll catch you in the next one.